After that wild day of trading we saw yesterday on Wall Street, what should we expect today, and what should investors keep in mind as the drama that Adam talks about plays out between Washington and Beijing? Michael Lee is at Investmark Advisory Group, and he's kind enough to get up early with us and joins us here from New York this morning. Good to see you, Michael. Thanks for coming on.
How are we doing?
We're doing all right. Boy, that was that was nuts yesterday to be down 500, then end up higher on the day 200. What did you make, first of all, just of the price action, and how did you handle it during the trading day?
So whenever we have days like this, I think it's important to keep perspective. A trade war doesn't really benefit anyone, but I'll say it would hurt China far more than it hurts us. Chinese exports to the U.S. are somewhere in the neighborhood of 800 billion, where our exports to them are somewhere in the neighborhood of 300 billion.
So you're betting they're going to back down. That's the bet.
Well, if we were to get into a trade war and we cut each other's imports by 50% respectively, that would cause a massive recession in China.
Right.
It'd be barely noticeable to the U.S. economy. This is not a war that Chinese can win. This is a trade war with the U.S. is not a war that anyone can win. Our imports
the only issue, I think, is that a trade war is not a war. Normally, we don't have a lot of historical precedent because people don't want to get into them. But you go back to the 30s and what have you, that anybody wins. You look at the two leaders on the screen, President Trump and Xi Jinping. One of the key differences, to challenge your point a little bit, is that Xi Jinping doesn't have the political pressures that a U.S. president would. In other words, he's not going anywhere. Well, maybe ever. I mean, so that he can dig in from that perspective.
I'll just disagree with that. If China goes into a recession, there's a chance that the government could be overthrown. The government props up their economy. What also they do is they also peg their currency to the U.S. dollar. That's why they buy so much of our debt. China needs the U.S. far more than the U.S. needs China. And it would be a lot easier for China to go to physical war with the U.S. than it would be to go to a trade war with the U.S. So I would disagree with that he won't get voted out, but he may get overthrown if they go into a recession. So there's a lot at stake here. And I think China has done a very good job in terms of foreign influence in the lobbying. That's not going to work with the Trump administration. So, look, I think definitely some short-term pain and a lot of market volatility, but it's not going to change the underpinnings of our economy, the fundamentals in the underlying stock market or GDP of the United States.
Well, which are strong. You're right about that, Michael. Thanks.